we're here on the floor of the New York Stock Exchange, and we're watching the major U.S. equity averages pull back. We may have opened higher, but the Dow is off by 100 points, and the S&P 500 and NASDAQ are also lower as well. So joining me to weigh in on the action is Tim Anderson of TJM Investments. Tim, great to have you here.
It's nice to be talking with you.
Well, we have a lot to talk about, actually. We saw the euro-dollar pop higher above the 108 level, and right now we're seeing the major averages trade lower. But bigger picture, what do you think is affecting the broader market?
Well, I think that we had some technical warning signs last week when the Russell 2000 and the S&P slipped slightly below their 50-day moving averages, and a couple of rallies later in the week then really couldn't get a lot of traction, and we could be having maybe the first stage of maybe a correction that might last 3 to 5 days. Maybe a week and a half. It's hard to tell. The sharper it goes down the first couple of days, probably the shorter the correction will last. But I think it's something that people have been maybe anticipating and waiting for since the very sharp post-election rally, and we might be in the first couple of days of that right now.
And we'll be paying attention to the Fed speeches that are coming out this week. We also have Janet Yellen speaking on Thursday as well. But if we look at the sectors in terms of the equity markets, when we talk about technology, we did see Facebook, Apple hit all-time highs, but we're seeing the most sectors lower on the session. So has there been a divergence in terms of your outlook?
Well, I don't know if I'd call it a divergence yet. I'd call it, but there's this continual rotation where, oil fell down below 50 a week and a half ago for the first time since November. It's now kind of struggling with that 50 level. Clearly, there's a lot of supply on the market. So I think maybe some money that had gone into oil late last year might be transitioning into technology and into a couple of sectors that have not had nearly as vibrant a move as the oil infrastructure plays have had.
And speaking of oil, we've been seeing interesting trading action, at least for this session. We opened higher, but now we're lower. And there are reports that OPEC could extend its production cuts beyond the month of June. So given what we're hearing so far, do you think that we'll see a higher action for oil futures going forward?
I just think the oil is going to really struggle to get back into the mid to high 50s. Unless OPEC makes really drastic cuts, because clearly the U.S. producers have shown that their break-even points for oil are a lot lower than what the market had expected and what OPEC had anticipated during the first big sell-off that we had 2 years ago. And even in the paper this morning, Shell is talking about expanding its very deep water drilling operations, which many people thought the break-even for that was close to the $70 range.
Okay, well, last but not least, before I let you go, this is the first time we're talking since we got the FOMC announcement as well as the press conference. And a lot of people took Yellen's comments to be dovish, but in the bigger picture, bigger scheme, what did you think of the statements?
Look, I think they're trying to weave a little bit of a fine line here by they definitely got some pushback on, well, we really haven't seen that much growth, that much economic growth yet. And the pushback and the Fed's response to that is, yes, but we're at near full employment and inflation is or at very, very close to 2%. And of course, the pushback from that is comments that they had made over and over again for a couple of years. We're going to let inflation run hot, even if it gets to 2%. So the question is whether or not they've kind of made a little bit of a shift in their building in expectations for a much stronger market, even though it can't be really documented in raw data yet. And we'll just have to see how that plays out in some of the speeches from the senior Fed people later this week.
And indeed, we do have plenty of Fed speeches on tap, including this evening, so I'm sure we'll be dissecting them. Thank you so much for joining.